Now, where does the Federal Reserve get its money to purchase securities so the government can cover the deficit with operating cash? The Federal Reserve does not use tax money for the purchase. In fact, the tax money has already been spent, which is the reason for the deficit years. The Federal Reserve, through typing whatever amount it's in need of through some keystrokes, creates the money it needs to purchase the securities so the government can cover the deficit through an operating cash loan. Remember, the money is created through computer keystrokes as a credit, with the money coming from nowhere to fund the credit. In a normal transaction, money has to come from somewhere to fund any credits. But not in the case of the Federal Reserve System purchases of securities to add liquidity to the banking system and/or lend money to the United States federal government. You dig? Cool. Now let's move on. Now the money is created out of thin air, and this is confirmed by the words of former Federal Reserve Chairman Ben Bernanke, who was chairman of the Federal Reserve from 2006 to 2014, as Ben Bernanke confirmed these facts in a 60 Minutes interview. Now listen to the following audio clip from the television show 60 Minutes, posted to YouTube by CBS, and listen to former Federal Reserve Chairman Ben Bernanke as he confirms Federal Reserve money creation out of thin air.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed.
These are the words of former Federal Reserve Chairman Ben Bernanke telling everyone how the Federal Reserve creates money by using computer keystrokes to mark up the size of the account that the bank has with the Fed. The money is not coming from a Federal Reserve account that has money in it to draw from to pay for the securities purchase as in a normal transaction. The Federal Reserve has $0 to draw from. The Federal Reserve has no money to begin with, but still has the ability to purchase securities by marking up the size of the accounts banks have with the Fed without having any money to cover the markup. You dig? The next audio clip will show how this is done. The Federal Reserve owned approximately $800 billion in securities at the beginning of the financial crisis, and in this audio clip, Ben Bernanke stated that the Federal Reserve purchased $2 trillion of additional securities. Now, how did the Federal Reserve purchase $800 billion of securities with no money, and later purchase $2 trillion additional dollars in securities? The Federal Reserve had no money. The Federal Reserve had $0 to purchase the $800 billion of securities that were on their balance sheet, and the Federal Reserve had $0 to purchase $2 trillion additional dollars of securities. The Federal Reserve had no money. This second audio clip will explain it in more detail. Now remember what Ben Bernanke stated in the first audio clip.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed.
In this second audio clip, Ben Bernanke also confirms Federal Reserve System money creation out of thin air in a 2012 college lecture posted on YouTube by the Federal Reserve. Now listen to this second audio clip.
Now, you might ask the question, well, the Fed's going out and buying $2 trillion of securities. How do we pay for that? And the answer is that we paid for those securities by crediting the bank accounts of the people who sold them to us. And those accounts at the banks showed up as reserves that the banks would hold with the Fed. So the Fed is a bank for the banks. Banks can hold deposit accounts with the Fed, essentially, and those are called reserve accounts. And so as the purchases of securities occurred, the way we paid for them was basically by increasing the amount of reserves that banks had in their accounts with the Fed. So you can see this here. This is the liability side of the Fed's balance sheet. Of course, assets and liabilities, including capital, have to be equal. So the liability side had also to rise near $3 trillion, as you can see.
Now, as Ben Bernanke stated in this second audio clip, the Federal Reserve marked up the deposit accounts that the banks have with the Federal Reserve. And the reserve account is the same thing as a deposit account. And the Federal Reserve used the balance sheet to show a credit of money to the bank accounts of the securities dealers. No money was deducted from a Federal Reserve account to pay the securities dealers for the purchases, as in the case of a normal transaction. The Federal Reserve had no money. The Federal Reserve had $0, so there was nowhere to draw money from to pay the securities dealers for the purchases, as in the case of a normal transaction. The Federal Reserve had $800 billion of securities on their balance sheet before they increased the amount through computer keystrokes to approximately $3 trillion of securities, which includes both the $800 billion of securities and the $2 trillion of securities. The Federal Reserve increased their asset side of their balance sheet to approximately $3 trillion, and they increased their liability side of their balance sheet to approximately $3 trillion, which made both sides of the balance sheet equal and showed a money transaction when there was no money coming from a Federal Reserve account to pay for the securities purchase, as in the case of a normal transaction. You dig? This is how the Federal Reserve System creates money out of thin air, and you now know how it's done. Now, we dig the fact that the Federal Reserve creates money out of thin air because there should be no poverty in the United States if the Federal Reserve money creation system was used properly. But what we don't dig is how the Federal Reserve money creation system is currently being used.